Well, if you're getting ready to buy a home and you're going through that mortgage application process, there's probably some things that you need to pay attention to. But what are some of those non-obvious things that people often overlook? We'll get that from Bill and his experience at Cross Country Mortgage. Welcome into the Smart Mortgage Show. I'm Ben George. He is Bill Litton, Regional President at Cross Country Mortgage. And Bill, I like today's topic because I think, we can quickly do some searches if we are in the market to buy a new home and just make sure we're aware of some of the most important things with the mortgage process. But I'm sure there's a lot of things that people overlook sometimes that aren't as obvious.
Yeah, and people do this. They get a mortgage so infrequently that it'd be hard to know. You don't know what you don't know. And also the logic behind the way that a mortgage is underwritten, sometimes it goes against, standard logic. It's almost illogical. Now, if you dig deep enough, there's a reason, there's like a derivative source as to where this logic came from, but it certainly is not commonsensical. So there are some things that I think people just don't realize when they think about a mortgage.
Yeah, hopefully today's show will help you out, just kind of help better prepare you so that you're not caught off guard when you're going through that mortgage process. And look, if you enjoy this, if you want to learn more, please subscribe to the channel. We'd appreciate that support. Remember, you can always text the word LEND to 21,000 to go ahead and take advantage of that initial conversation with Bill, a free 15 to 20 minute loan consultation, and begin letting him learn a little bit more about what your goals are, where you currently stand, and help get you in the best position possible as you look for that new home. So, Bill, first thing, not obvious. Again, these are things that maybe you weren't too aware of, but these are common, misunderstandings or common mistakes that people make. What's maybe the first thing on your list?
Yeah. So the first thing that I see a lot, and we work with a lot of retirees, and a retiree might have had a really great job, and they might have saved a lot of money, and they might have a lot of equity in their current house. But now that they're retired and the income has decreased because they don't have the career income anymore, they're on a pension or Social Security or, other forms of retirement income, it makes it a lot harder to qualify. So we always recommend, before you have retired, do some mortgage planning with a mortgage professional to understand, do I have to make this move before I retire? Or, because a lot of times people don't do the mortgage planning piece. We get them after they've already retired. And I would tell you that with some creative programs that we have, we're able to still help, still make it work. But it does come to a surprise to that home buyer when they've done everything right their whole life. They've saved money. They've fully funded their 401k. They've got great credit. They've got a lot of equity, and it's not just a slam dunk.
Yeah, that's a good thing to know. I know most people wouldn't even think about that, really, is they're getting ready for that next chapter of life, and they have everything else kind of in place. So something else to think about there. All right, that's a good one to start with, Bill. What's another thing people overlook often?
So the other one I see a lot is if you miss a credit card payment, and it could be on a very small credit card. It could be with a balance of $10 on the credit card. First of all, people think as soon as they catch up that payment, that their credit should be restored, and that's not the case. And the result of a 30-day late payment could drop your score 100 points. It might take a year to recover. And when you're talking about the impact on the interest rate from a mortgage perspective, you're literally talking about hundreds of dollars a month, thousands of dollars a year just for missing one little payment.
Yeah, it can be pretty significant, I think. I'm sure it's an easy thing to just kind of mess up if you're really busy and you have a lot on your plate trying to get into a home. But it's something that you have to pay attention to and just make sure, I guess you have to be a little extra diligent during this time period, don't you?
You really do. And I think during this time period, absolutely, like high level of diligence on everything. But with your credit, always just your credit score is impacted when you're 30 days late on a car loan, a student loan, a mortgage, a credit card. Just make sure you never go 30 days late, because that is a catastrophic. I've seen so many people's credit just obliterated by, having these maybe 2 or 3 lates, a credit card, a car loan. And it really, these people are responsible people with good incomes, but missing things like that will have a dramatic impact on your credit score and therefore your interest rate.
Yeah, that's a very good one. So keep that in mind as well. What's another non-obvious thing then, Bill, that you come across from people that are trying to buy a home?
So I hear a lot where people will say, but I've got an 800 credit score and I've got $1 million in the bank and you won't lend me 400,000. And a lot of times it's like, well, it's not that we won't lend it to you, but it's not a completely straightforward, simple scenario. And the reason is there are multiple legs to the pre-approval stool, right? One of them is credit. One of them is income and debt ratio. One of them is how much money do you have saved that you could put into the transaction and how much do you have in the bank afterwards? And the other is the collateral, that the property's in good condition. So you really need to have, now there are some programs that will allow you to be deficient in one of those areas, but the rates are higher. We're always aiming to get you the best interest rate and the best terms. We're always starting there. And in order to do that, you really need to fulfill the requirements in each of those categories. So you could have perfect credit and you could have $1 million in the bank and you're only trying to borrow $100,000, but you're not yet retired and you don't have any income right now. That's going to be really hard to do. Now, we do have a way to do that. But to do it with a standard conventional mortgage, that could be really tough because you don't have one of those requirements.
Yeah, that's a good one. I think most people wouldn't be aware of. So there's three things then that are non-obvious that, again, could give you some problems, but Bill comes across them quite a bit. Is there anything else, Bill, you'd add to this list before we finish up?
Yeah. So very quickly, the most painful part of getting a mortgage is verifying where the funds to close are coming from, paper trailing it, sourcing it, making sure that it's your money. That's the least fun of once you're under contract, all of that verifying. So we always get you through it, but sometimes it can be a little bit annoying. And the lender wants to make sure it's really your money, because what if it's not? What if you went out and you borrowed the money from somebody else and now there's another $2,000 a month payment that's not on the credit report, right? Maybe it's a private loan to someone and that can't be factored into your debt ratio because we don't know about it. But now you really don't qualify and you really can't afford the house. That's why they always do a look back and see it, hey, let's go back 2 months and see where did this money come from? Did it come from an eligible source? And that's why the underwriter puts you through the paces on those to make sure that you're not getting yourself in trouble. The money's not borrowed.
Yeah. And ultimately it's for your own protection, right? I mean, that's the reason why you guys go through that much of putting in your due diligence for that. So important to remember. So again, these are some things to maybe be aware of that could come up during that mortgage and loan process, but maybe not so obvious to a lot of people that haven't done this before. And that's most people going through this home buying process. So some good things to understand and know. Again, if you want to get in touch with Bill over at Cross Country Mortgage, he is a regional president there, their office there in South Pennsylvania around Delaware. So in that Delaware Valley region, you'll be able to get in touch with him. But you can also text the word LEND to 21,000 to get that free mortgage and loan consultation, and all the contact info down below in the show description. Please subscribe as well if you haven't done that. Would appreciate that support. We'll have more information coming to you. Our goal, again, to always educate you and put you in the best position possible when you're looking to buy that new home. So we hope we've done that today. We'll have another video coming soon. Bill, thanks for your time as always.
Thanks so much, Ben. Thanks everybody for tuning in.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.